Mohit Gang is here to help us understand what should investors really look at in terms of trends, Mohit, because it seems that there are new lifetime highs being created and then markets are back into consolidation phase. What should investors who have been sort of, doing their SIPs, mutual funds, be looking at to understand which way the market is likely to head from here?
Hi, morning Kartik. Always a pleasure to be on your show.
Thank you for joining us.
Look, thank you so much. Honestly, hand on heart, I don't think so. There is any trend in the market right now. It's a very difficult market to call out for. The fact remains that markets have made a new all-time high, and but that all-time high comes with very weak set of underlying tone, right? So if you see from last September to this new all-time high. Basically, out of Nifty 500 odd companies, almost like 360, 380 odd companies are in negative, right? So
Right.
there are very little companies who have actually propelled the Nifty up to this level. And if you see sectoral trends also, there was a short spurt in, let's say, in last 1 year of 1 or 2 months where you saw consumption doing well on the back of GST announcements or tax rate cuts. Then there was a time when defense did well on the back of global uncertainty, and then there was a time when the PSU banks were running, right? But there hasn't been a sustainable long-term trend. There hasn't been a sustainable even style of a market which has actually worked out. It's not that the quality has worked out, or it's not that growth-oriented companies have worked out. I think a lot of money in the market is getting sucked out in the primary issues, and there is very little left for the broader market to actually work in that kind of an environment. So my sense is, I think, look, for retail investors, SIP still continues to be the best bet out there.
Okay.
You continue to put in your daily chunks, regular chunks in the market, because the broader macros are looking stable,
Uh-huh.
which reflects in your GDP numbers, which reflects in your low inflation numbers, and perhaps you will get a rate cut from the RBI as a gift to top it up, right? So I
Right.
think the overall concoction is pretty well set. It's just that the global FI money has to come in, the currency has to stabilize, and markets have to start putting in some kind of show with some sector actually leading the rally. I saw that in financials, but it has to be more sustainable, right? So my sense is wait and watch for the markets to actually kind of settle at this mark at a new peak, and perhaps look for some sectoral leadership out there. In that meanwhile, just continue building your gradual allocation. It's not the time to actually jump in with a whole lot of money right now.
If you look at the GST collection numbers for the month of November, now there are two arguments here. One argument is that consumption overall is not as buoyant as one would have assumed consumption to be. But the other argument is that since the GST rates have only corrected downwards, then the overall collection for the government is, is not adding up to the same averages that one was used to seeing the data earlier. But all those are fundamental economic discussions which we will park maybe for another day. Right now, I want to go back to something you'd mentioned earlier when you started speaking about investors choosing certain specific themes potentially, because it seems that at a time like this, your SIPs or even any extra cash that you have, putting it in passive investing tools, looking only at index investing, may continue to be volatile. But if you were to sort of advise investors on keeping an eye on certain themes, certain sectors, what in your mind are those sectors which over the next 1 year, over the next 3 years are likely to give them decent dividends?
Okay, Karthik, I think that's a difficult one, but I still continue to believe that you can play the consumption story. My sense is, I think gradually the numbers will start reflecting in the broader economy, because there's been a massive bonanza in way of direct and indirect tax cuts, and it cannot happen that the numbers go amiss, right? So somewhere that spending has to come through. So that's number one. I think financials are looking extremely attractive from a valuation perspective, and the sector per se has shown some kind of leadership. If you see the broader banking index, right? And I think for last 1 month on, when markets have shown some kind of strength, I think banking has led it all the way. So my sense is financials, I think I continue to remain bullish, though by virtue of it being an overweight sector on the index itself, I think broadly anything which you buy by virtue of a fund will always have banking as the largest component. But yes, if you want to play a sectoral theme, then I think banking continues to be one. Other than that, honestly, there has been telltale signs, but not a very convincing story for someone who's looking at a very long term view. Let's say who's convinced with a 1.5, 2 year kind of a horizon. A contra bat could be IT right now, or even pharma for that matter. But again, there has to be some more concrete signs for these two sectors to start reflecting in the overall numbers. But as of now, I think banking or financial services, the broader financial services, including capital markets, including NBFCs, I think that's the play I'm more bullish on.